the Wednesday, September 18th meeting of the Finance Committee, and we'll call the meeting to order. Oh, thank you. First, is there any public comment on this matter?
No, sir.
All right, thank you. All right, the first item is approval of the minutes from September 18th Finance Committee meeting. I'll accept a motion.
Make a motion, Mr. Chair, that we accept the minutes as presented.
Is there a
I'll second the motion.
All right, thank you so much. All in favor signify by raising your hand or saying aye.
Watson is aye.
Thank you, sir. All right, the second thing is the fiscal year 2024 audit presentation acceptance. Mr. Scott from Malden Jenkins. Thank you, sir.
Well, good afternoon, everyone. Again, my name is Trey Scott with Malden and Jenkins. I was the partner who oversaw the audit of the Commission's 2024 financial statements, and pleased to be here with you all to discuss the results of that audit. Just kind of give you an idea of why I'm here, give you a quick introduction to Malden and Jenkins in case you're unfamiliar with us, go over our audit opinion, your financial statements and compliance reports, some required communications, a few other matters, and then certainly answer any questions that you all may have. Really quickly about Malden and Jenkins, we were founded a little over 100 years ago. We serve over 725 governmental entities throughout the Southeast. Do that across 14 offices in 6 states, and the office that serves you all is our Savannah, Georgia office. Enough about us, though. I think what's of particular importance to you all is our auditor's report. I think, as you all know, the financial statements themselves are the responsibility of the Commission's management. It's our responsibility as your auditor to express an opinion on that financial information based on our audit. And we do that by following generally accepted auditing standards and government auditing standards. And I'm pleased to report to you all today that we issued the Commission a clean opinion, what we call an unmodified opinion. It's the highest level of assurance that we can provide to you as your auditor. We also had no audit findings again this year, no management letter comments. I think that's just a testament to the hard work of the Finance Department. We work primarily with David and Francis, and certainly something I think they should be commended for, and I think something you all should be very proud of as well. A few slides on the numbers themselves so that you don't have to thumb through that 50, 65-page set of financial statements. All very good trends from what I can tell. Your assets are up almost $17 million, primarily the result of your increase in your capital assets. So looks good that we're continuing to reinvest in the system, which is what we should be doing. Slight increase in your liabilities. I think that was primarily some accounts payable related timing type things. So nothing really to be concerned with there. If we move on to the income statement, the P&L, your operating revenues are up, but all operating expenses typically are up when that occurs as well. But operating income did decrease a little bit, but $8 million is pretty significant, pretty good number as it relates to operating income for a commission of your size, for sure. So again, good positive overall trends with operations. Your non-operating section, investment income was $3.4 million this year, so up pretty significantly over the prior year. And then interest expense, you paid about $2 million on your long-term debt related to interest. Ultimately, your bottom line increase was $16.1 million in comparison to about $11.2 in the prior year. So that's really good and really positive as well. Final statement, your statement of cash flows. Again, you continue to have real strong positive operating cash flows, which is what we would want to see for a standalone business type activity like the Commission. And you can see that's even better than what it was in 2023. And then you can see kind of how we use those operating cash flows. We purchased about $18.7 million in capital asset related items and paid down about $3.7 million in principal and interest on your long-term debt. Ultimately, cash did increase this year up to $33.5 million. So again, all good positive indicators as it relates to financial indicators as it relates to your financial statements themselves. We had no new Governmental Accounting Standards Board or GASB statements to implement this year, which was great. So no new footnotes, nothing changed really there other than obviously updating those for your current year numbers. So no significant issues or changes as it relates to your footnotes. In the back of your financial statements where we have our compliance reports, your Yellow Book report, is not, we don't provide you with an opinion on your controls and compliance, but if we had any issues we needed to report to you, like findings, that's where those would be reported. So no problems there. You all spent more than $750,000 in federal expenditures again this year, so you were required to have a single audit of your major grant program, and that one was your ARPA grant. About $1.1 million was spent. We issued an unmodified opinion on compliance as it relates to that program, so a clean opinion on your grant program as well, so no findings there. Definitely a good thing. A few required communications. I'll just kind of hit on the high points here. Your accounting policies, those are disclosed in your statements. Your judgments, your estimates, all of that's in your financial statements. They're very integral parts of your financial statements, and those are the responsibility of management. We had no past audit adjustments, so we had very few, I think less than maybe 2 or 3 auditor proposed adjustments, and those were just reclassification entries where we're doing some reclassification things just for financial statement purposes. So what that ought to tell you is that take some solace in those numbers that you're seeing on a monthly or quarterly basis, and that your auditor's not having to come in at the end of the year, make a bunch of corrections. The numbers you're making decisions on are good numbers. So again, another testament to the hard work of the finance department, and something I think you all should be very proud of as well. No difficulties in the performance of our audit, no disagreements with management. Had no new pronouncements, as I noted, but there will be a few coming up next fiscal year and then in fiscal year 26. But we'll work with the finance department on the best course of action for implementation of those. And then finally, just want to make sure you all are aware that we're independent of the commission in accordance with all of the applicable standards of our profession. And then finally, just some value-added services we provide only to our clients. I know the finance department does participate or attend our quarterly continuing education classes. We're glad to have them. And then we do send out newsletters periodically on pertinent governmental topics as well. And that pretty much concludes what I had to report to you all today. Again, a clean opinion, no findings. It's always a pleasure to serve the commission, and we look forward to serving you all in the future. Be happy to answer any questions you have.
Anyone have any questions? I have one question. When you're conducting the audit, is some of it is on-site here and a lot of it is transferring information to your offices?
That's right. I think we do, used to before COVID, and we realized we could do a lot of things virtually, we would spend probably a week on site. Now, do we come out for a day? Yeah, it's just a day. So technology's allowed us to be pretty efficient when it comes to the conduct of the audit. So,
any other questions?
None for me.
All right. Thank you so much. I believe we need to have an motion to approve this.
Yes, I move that the Joint Water and Sewer Finance Committee recommend to the full commission the acceptance of the audited financial report for the fiscal year end June 30th, 2024, and authorization of its release to the public and reporting agencies.
I'll second.
Thank you, sir. Yes, any other questions? All right, all those in favor signify by saying aye, or raise your hand.
Watson, yes.
And I just want to thank our finance department for their hard work and acknowledge the excellent work they're doing. And as this gentleman said, you're one of the easiest, I think, to work with, always, and a tradition that continues on. And we thank you very much for your work.
Absolutely. Thank y'all.
All right.
Thank you.
All right, now we're item number 3, fiscal year 2024 year-end transfer. Mr. Burrows?
Yes, sir. So based on the audited financial statements that we were just presented, we are showing a net operating revenue for the year of a little over $3.2 million. You can see the math there, what the operating expenses and non-operating expenses were versus revenue. Because we have managed the budget effectively with the revenues coming in, our personnel costs came in approximately $315,000 under budget due to difficulty filling positions. Our revenues came in stronger than expected, particularly the service fees and operational fees from new construction and septic hauler fees. Those 3 line items totaled approximately $1.1 million over projected revenues for those. Based off of our current cash flow and projected cash flow moving forward, we're comfortable recommending a total transfer amount from the previous fiscal year funds of approximately $2.2 million. When we started thinking about what we wanted to potentially do with this $2.2 million, the 2 things we wanted to focus on were retiring debt where we could to get those out of the way. Based off of our most recent pension plan actuarial review, our unfunded liability from the pension program as of January 1st is $1,281,842. From an actuarial perspective, our funding is approximately 89%. And so we would recommend we pay off that unfunded portion of the liability. Now, this will take about 2 years to actually show up on our financial statements because of the way the timing works. The pension year runs through the end of September, and we're in October now. So next year's pension statement will not include any additional transfers to the pension fund until the following years are announced. So keep that in mind. And the other thing we're only looking at doing, we have an existing capital lease for the purchase of the 4 VATCons that we approved at the August 2022 commission meeting. The balance on that lease is $902,570.93. So staff recommends with the amount, year-end amount of approximately $2.2 million. It's not exactly $2.2 million, but it's to transfer $1,281,842 to the Brunswick-Glynn County Water and Sewer Retirement Plan. That is the official name of the retirement plan, so that is not a typo. And then $902,570.93 to Truist Bank to retire the VATCon lease. And what this will do will, the unfunded portion of the pension cost us approximately $180,000 a year in the annual budget. And then we're paying about $400,000 a year for the VATCon lease. 336. So we'll free up approximately $500,000 worth of operating expenses in the budget by retiring this debt early. So we'll still have ongoing pension expenses for the accrued experience, but we'll hopefully knock out the totality of the unfunded portion. It'll just be new experience that is coming in. And so taking these remaining funds and retiring debt seems like a good use of these funds moving forward. So that's the recommendation from staff.
I had a question here. The transfer amount and the recommended motion are different numbers.
We're at
Transfer
Look the same.
281. Yes, 281. That's a
Oh,
typo. That will be corrected for tomorrow. My apologies.
Yeah, well, that's we'll make the motion.
Yeah.
Corrected motion on that.
Yes.
You want to do the motion?
Sure.
All right.
If we're ready.
Go ahead.
I move that the Finance Committee recommend to the full commission authorize the transfer of $1,281,840.42 to the Brunswick-Glynn County Water and Sewer Retirement Plan, and $902,570.93 to Truist Bank to retire the VATCon lease from net operating revenue generated from fiscal year 2024.
All right. Is there a second?
I'll second that.
All right. Thank you. Any questions or discussion? You know, I just want to say that I think the two things that that our director has picked out are very, very valuable. Our commitment in the retirement is to the employees for their future, and it's important that we keep the funding up on that. And 89% is a little lower than I'm comfortable with, and this will rectify that significantly. Even though pensions are kind of a moving target.
Right.
But I mean, for now, it'll be good. And remember something also, the pension obligations are smoothed over a period of 5 years because of the financial ups and downs of things. So this is certainly a good commitment for the future for this retirement plan. Any other discussion or questions? Okay, all those in favor either raise your hand or signify by saying aye.
Watson, yes.
Okay, thank you, sir. Okay, then item number 4 is the Christmas gift cards.
Mr. Owens is going to handle this one.
Who's handling this? Mr. Owens?
I can take care of that.
Great.
My apologies for my tardiness, gentlemen. Each year, the Brunswick-Glynn Joint Water and Sewer Commission likes to show its appreciation to its employees by purchasing them gift cards. And last year, we did this in the amount of $100 per gift card. This year, we are planning to do the same thing. This is a budgeted expense each year. And at this time, the staff recommends that the Finance Committee recommend to the full commission the approval of the purchase of a $100 gift card for each employee, a total of $143 gift cards for a dollar total of $14,300.
Great. You ready to do the motion?
Sure.
Okay.
I'll make a motion that the Finance Committee recommend the full commission approve providing employees with a gift card in the amount of $100 to Walmart. Total number of cards would be 143 for a cost of $14,300.
There a
Second.
Second? Yes? All right.
Yes.
Any discussion? They're just thankful we can do this, and I know our employees all appreciate that significantly, so.
Absolutely.
Yeah, I was gonna echo the same thing. I guess the only ask I would have is in the future. I know that Walmart is kind of the shop all location, but it would be great if we could do a little research. I don't know if we have an alternative that's a local entity, but it would be nice if we kind of explored that
Sure.
and see if we could find an alternative
Certainly.
in the future to support a local business, and so that this money could stay locally.
Certainly.
All right, and no more discussion. All those in favor?
Watson, yes.
All right, that passes 3-0. Thank you very much. All right, now we're up to the financial statements for the month end of September 30th. Ms. Wilson, as always, good to see you.
Good to be here. Good afternoon, gentlemen.
Afternoon.
We have before us the financial statements as of September the 30th, 2024. We'll start with our balance sheet. Please note that the June 30th column has been updated to 2024 numbers pending acceptance tomorrow. We'll note that we have their intergovernmental receivable. It was $1,513,980. That receivable has since been received and booked, so that's why it is now at a 0. Interest receivable, $461,000 as of June 30th. That is on our investments, and half of that has been booked by September 30th, so that number is half the amount. Down to our one part that I did not color in there, our total restricted cash, it was $74,672,000. That is an increase from fiscal year 23 by $3.5 million for year end. Fixed assets, 164 on June 30th. That is a $16.5 million increase from fiscal year 23. We are still at $164,500,000 for September 30th because we had not done any entries with capital assets until the audit was complete. So now that that's done, we'll go back and do any up-to-date. That's also the same with depreciation. We choose not to run that until the audit is complete in case we have to go back and pull anything off that fixed asset register. Deferred pension outflows, 1.5. That has decreased $650,000 from the fiscal 23 number. Unearned revenue, again, that was the $4 million from the ARPA funds. We've used just a small amount, so we did have to book that as revenue for fiscal year 24, and that number's down to $3,769,000. Page 2. I didn't color anything in, but I will mention again, net pension liability, that decreased from fiscal year 23 down to a little over $3 million. And the total of our net position, as mentioned earlier, changed by $16 million from fiscal year 23 to fiscal year 24. Any questions on the balance sheet? On to page 3. Summary revenue. Again, we use the percentages instead of the 1/12 of allotment. So sewer is 27.27, water revenues 28.19, debt charges 24.83, and administrative fees the 24.96. We currently are over the projected budget by $991,000 at this time. And again, some of our usage is seasonal, and that will fluctuate just a little. Again, our interest income, we are over the projected budget by $750,000 at this time. Net operating revenue, $196,000. Our, before capital fees, that's a loss of, a negative of 21,000 at this time. Capital improvement fees, 445,000 to date. We were at 410 this time last year, so hanging steady. We've received one SPOS check for this fiscal year. The July and August checks were receivables because it was on fiscal year 24. It was the May and June check received in July and August. So we've only had one check as of June 30th, and that was for the 329,000. Any questions on revenues?
Can you just remind me what so we're above projected revenues for operating revenues. What factor did we use for this year versus last year? Obviously, we came in above last year. Are we estimating the same increase as last year? Do we use the same number, basically, in what we projected?
The projected
increase?
rate increase was 4%.
4%?
Yeah.
Thank you.
Any other questions on revenue? Page 4, our expenses. Operating expenses, we are over the projected budget by 794,000. That does include purchase orders. So if you'll notice for the 3-month budget, we're at 6.8 and the actual expense is 6.2 and our POs are 1.3 and those include annual purchase orders. So that skews that number just a little. But for the actuals to date, we came in under budget by 586,000. Any questions on that? I will mention one other thing. Unfortunately, I did not have time to do the quarterly report for the group insurance, the detail. But the budget was, as of September the 30th, my apologies, was a little less than 400,000. Expense-wise, we are at 517,000. So we're over budget at this time by $117,250 on group insurance. But that does seem to fluctuate a little bit throughout the year. Any questions on expenses? On to page 5 and 6. We have our supplemental schedule of cash balances. As also referenced on the balance sheet, our cash and cash equivalents at 3.7, bond sinking fund and debt service at 1.4. We will have an interest payment on December 1st, so we'll continue to increase that until we have that interest payment. We just calculate the annual as a 12-month and fund it that way. It's easier for us to track, but it also makes it easier on U.S. Bank because they split that one transfer into our bond and the debt service account. Page 6 brings our total of our cash equivalents, investments, all of that, $80,512,565, with $54.2 million of that being in our investments. Any questions on cash? Page 7 gives you a quick view of where we are with our investments as of September the 30th. If you have any questions on investments, we'll direct them to Mr. Owens. Page 8, project report. Our expenses year to date, just a little shy of 2.4 million. And again, if we run that same report now, that would change a little bit because pay apps come in the month after we run the report. So, and again, our CIP total, the 26 million, matches our balance sheet number. With those 2.4 million in expenses, you'll notice that a huge majority of that is from our R&R reserve. Any questions on our project report? I'm sure y'all got the lowdown on that during facilities. Okay, so I've got one other sheet here, and this is just a quick preview of the 12 months ended June 30th. You got a lot of that information from Mr. Scott. And as Mr. Burrows referenced, our operating reserves, $42,898,287. Operating expenses, $27,303,253. a net operating revenue of a little over 4 million there, and net revenue before capital fees, $3,006,248. Any questions on June 30th numbers or September 30th financial statements?
Now that the audit's been accepted, these will become regular, they'll become the permanent numbers,
Yes.
right? Yeah.
Yes.
I mean, they were technically unaudited until we voted today, but they're the same, I'm assuming.
Yes.
Okay, right. I have a question for Mr. Owens. I noticed we have some investments that are coming due this month. The interest rates obviously are down some. Do you have a sense of what we're expecting?
Other than holding off on reinvesting some capital and operational reserve investments, so that we can move those funds over and pay off the VAC-on rate and the pension liability. Everything is currently status quo as far as our investment strategy, no changes at present, but we continue to monitor this frequently to make sure that we don't get caught.
Right. All right, well, thank you. I appreciate that information.
Any other questions?
Good.
Oh, all right.
Thank you all.
All right, I believe does any commissioner have anything else to add? Nope. All right, well then we'll.
No,
take a
thank you.
motion to adjourn.
Mr. Watson?
Thank you very much.
Okay, thank you.
Motion to adjourn.
We are adjourned.